A perfectly timed article from Goldman Sachs wealth management CIO essentially downplaying the virtues of Bitcoin, while, of course, the Bitcoin price is going down. Are they being transparent, or are they just adding FUD to the market for their own ends? Welcome back, everyone. All right, so we've got another day, another massive dip. Anyways, Bitcoin dead at 65K or 66K, wherever we are today. All right, so I thought that this article was super interesting, and that's why we're going to dive into it. And of course, I just want to show a different perspective, because on one hand, you've got this one person here, the wealth management CIO, talking about how Bitcoin bad, it enables criminals. But on the other hand, Goldman Sachs is building their own infrastructure. So what the fuck, right? What the fuck? Let's dive into it. Don't only listen to what they say, watch what they do. Goldman Sachs wealth management CIO unwavering in her crypto skepticism despite soaring Bitcoin values. And of course, they consider Bitcoin part of the rest of the crypto crap, even though digital scarcity could only be created once, and your shitcoin ain't it. It ain't it. Anyways, in a financial landscape increasingly captivated by the allure of cryptocurrencies, Sharman Mosavar Ramni stands as a steadfast beacon of skepticism. Despite the escalating trend of digital currencies, she remains unwavering in her critical stance, a position not only reflective of her own convictions, but also echoed by the lack of interest in cryptocurrencies among her clients. That's an interesting statement. Most of our Ramani's reluctance stems from a core belief that the indeterminate value of cryptocurrencies with no earnings, cash flow, or dividends, she argues that cryptocurrencies defy the basic principles of investment valuation. You have to pay attention to the story that's being told. What am I being sold with this story? You are being sold a different product, because obviously, right, they don't own the means of production of all the Crapto projects out there, and they definitely don't control Bitcoin. So what needs to happen is that we need these very respectable, highly educated, highly credentialized people to tell us how to think and what to do. And that is exactly what she is doing. We don't think it is an investment asset class. We're not believers in crypto. If you cannot assign a value, then how can you be bullish or bearish? The Wall Street Journal article goes on to say that her critique of cryptocurrencies extends beyond their volatility. Here we go, guys. Here comes the the rinse repeat arguments, right? She sees them as a facilitator of illicit activities. Yeah, it's definitely not the institutions that own the rails for all of money transfers. It's not them. It's these other things that are evil, right? It's not the fact that the US dollar is the most used currency for illicit activity around the world. No, it's this other thing. And guys, keep in mind that they don't really give a shit about illicit activity. They don't give a fuck about these things. All they care about is their moat and their control. That's all. Anyways, challenging the very fabric of societal governance and law. Again, the language is very important, right? Because you see, by using specific wording, right, societal governance and law, it means that anybody who doesn't agree with this is standing outside of acceptable society. You could be very dangerous. Again, this is what propaganda looks like. This is what absolute brainwashing and bullshit looks like. Anyways, this perspective was shared in a comprehensive critique titled Digital Assets, Beauty is Not in the Eye of the Beholder, published by Mosavar Ramni and her team in June 2021. 2021, you say? The document underscores the volatility of Bitcoin and questions its viability as a widespread medium of exchange. Clearly, Goldman Sachs is not in the Crapto space, right? Right? Here's a Reuters article from 2023. Goldman Sachs digital assets chief sees huge appetite for blockchain assets. So wait a second. This article just came out on April 3rd, 2024. Goldman Sachs hates this, but they were referring to a long paper that Ramani wrote in 2021. But yet, here we are, a little less than 5 months ago, December 13th, 2023. Huge appetite for blockchain assets. Indeed, you'll notice what I just said. Blockchain assets, not other people's, theirs, their blockchain assets. It's such a fucking ruse. Anyways, okay. Goldman Sachs expects a significant uptick in trading volumes of blockchain-based assets. Within the next 1 or 2 years, the bank's global head of digital assets told Reuters the Wall Street heavyweight has also seen increasing client interest in crypto derivatives trading. What? That article that just came out said there was less interest in that. I don't know what to think, as markets expect the U.S. securities regulator to soon approve an application for a spot Bitcoin ETF. But McDermott said he remains focused on developing digital assets beyond cryptocurrency, including issuing, here we go, guys, issuing blockchain-based tokens which represent traditional assets such as bonds. He said there was a huge appetite for digital assets, which has grown significantly in the last 12 months. There seems to be a discrepancy here. He works for Goldman Sachs, specifically with the digital assets. He seems to be thinking that there's a high demand for this stuff, and yet Ramani, she sees something totally different. Who knows? Who knows? But again, the key is in the wording, right? Blockchain-based tokens which represent traditional assets. Guys, everything in this space is bad except what we create and what we approve and what we sell and what we make money from. That's all it is. Okay? That's all it is. Again, more evidence of the watch what they do. Right? Let's see what they do. It's not just what they say. So here we are. We're on the Goldman Sachs website. This is their developer portal. A blockchain. This is GSDApp, by the way. DApp TM. It's trademarked, obviously. A blockchain-based platform reimagining the transfer of information and value in financial services. Interesting. Interesting that they have this, even though there's no demand for any of this. No demand at all. Now, look, the foundation for the future of financial services, but I thought that you couldn't figure out what to do, right? Their CIO is completely confused and says this is all just used for crime. And of course, I just want to remind everyone, less than 0.01% of crime is actually facilitated through Bitcoin and Crapto. So again, these are all just excuses, okay, that are used to herd the general population. Okay, and the last piece of confusing information that just doesn't tie into her perfectly timed article today, just also doesn't fit in. So here's another Goldman Sachs portal right here. And guys, as you know, all these links are in the show notes. Look at that, blockchain, the new technology of trust. Of course it is. Of course it is. New technology redefining the way we transact. It sounds incredibly far-reaching. That's because it is. Blockchain has the potential to change the way we buy and sell, interact with government, and verify the authenticity of everything from property titles to organic vegetables. That's right, guys. That's right. So Goldman Sachs isn't about what's going on right now in the space. They are about the walled garden that they're going to create for themselves in this space. That's really what it's all about. And there you have it, guys. There you have it. You can't trust anything that these people say. And I'm not saying that you should necessarily trust what I'm saying either. I mean, like, I'm just going through these articles and I'm pulling this stuff together. And to me, it just seems like a lot of the same old, right? A lot of the same old. It's a good opportunity when Bitcoin price, when the Bitcoin price is going down, you just kind of put out one of those articles, just to, kick people when they're down a little. And then, hey, it might cause some weak hands to dump a little, right? Pull the price back even more. They don't really give a shit. They don't actually care. Like, so for people like us, right? Like we sit there and we're paying attention like this is like the only thing. But for them, all they see are trading volumes and dollar signs. So it doesn't make a difference. And hey, I mean, you kick the Bitcoin price and, cause enough FUD in the market, well, maybe there'll be some demand for your walled garden products. Guys, it's what I've been saying from, I shouldn't say from the beginning, but now at least I definitely say 6 to 8 months. This is the changing of the guard. We are seeing TradFi entrench itself more and more into this space. It is not by fluke. There is tons of money to be made as our local currencies continue to become of poorer quality. The desire and the need to gamble on riskier and riskier things, because I'm not going to call them assets. I don't know what the fuck they are. Okay, digital assets, whatever you want. Things, it just goes up, right? It increases. People need to take on more and more risk in order to find alpha. So, guys, let me know what you think. Put it in the comments, and I'm going to catch you all tomorrow.